So there is no time like a bull party, and the bulls are partying hard after getting a tremendous victory today. Some may say huge, but looking at it, right, we crank right back into greed, smack right into the start of where pain starts for the bear team. As we covered in the weekend deep dive, link down in the description below, that there was a lot of net speculative positions still open. They didn't add to it, so it's not going to be as painful. But if we start running up on this market, then, well, it's going to be very, very interesting. And the first thing we did today is we actually gapped up and actually didn't fill the gap to the downside. We did retrace a little bit on the market, right? So we did have that bumping through the day. If we go to the 15-minute candle, we can clearly see the beginning of the day was a little bit choppy, right? We bounced into that 554 level that we went over in the weekend deep dive video and basically just slammed back down, filled the gap actually that we kind of had since the open, right, since last night, and then pushed right back up after 12 o'clock as the traditional bull party reigns supreme there. And subsequently now we really have to ask the question, are we going to continue this rally into the tech earnings? We're going to be giving you guys the tech earnings play today, so make sure you guys stay tuned for that, where we're going to give you the Google play that I'm going to be doing, and I'm going to be talking about Tesla as well. So for all those Tesla fanboys out there, make sure you stay to the end of the video for it. However, I'm going to give you guys the market level update right now, and then we'll dive into the earnings plays, the bull, the bearish thesis, Google, Tesla, with all that fun stuff. But beforehand, guys, if you wouldn't mind actually subscribing to the channel down below and hitting the bell notification, it helps the channel out and you get more of this type of content where we give you basically free option plays out there. Some people actually charge for this stuff. I just rather give you guys the bull and the bear thesis, let you decide for which team you want to play, and then thus the consequences are your own, not trying to force you into anything. So going back to the S&P, congratulations, you're back above 554.19. You did close within 50 cents of it, so now we have to start saying, are we going to start breaking below 554.19? And now the bearish thesis, right? If you're playing the bearish thesis, a break of 554.19 would be the target point for you actually to start putting on a bearish position. That means we've advanced and now we're weakening, going back into that gap fill and subsequently breaking down below. Now, the flip side of that is if we get a bullish thesis, right? We gap down tomorrow on open and push right back through 554. That would be extremely bullish. At that point, I'm going to be looking at bullish plays on futures, bullish plays on options on the S&P, probably 0 DTE calls on the market, targeting 557, right? Because we're going to have another 1% day. Going into tech earnings, going into Tesla, and we're going to be live streaming it tonight at 7 p.m. Eastern, so make sure you guys stop in for that and why you should be subscribed to the channel. And so bell notifications on as well so you know when we go live. So really 557, which is a 9-day moving average, is what I'd be targeting if that plays out. So your bearish thesis is you break 554.19 and subsequently stay below, targeting 547.91, and then subsequently a 50-day moving average below. Nice bear flag pattern playing out there, A to B to the downside. If we gap down on open tomorrow and push up past 554.19, all bearish bets are off, and we go full on bullish into tech earnings, and we expect tech earnings to be massive. So with that being said, I'm not even going to talk about 560 until we get above 557, until we get a nice 1% day on the S&P. Now, for all those that love to play the NASDAQ, right, we're going to give you the same spiel here. So really, you don't have a level to the upside for the NASDAQ, but you do have a pivotal point. Basically, you can use the candle body, essentially where we opened last night, at essentially that level would be 481. If you're below 481 or gapping down below 481, pushing back through it, pushing past 482, bull thesis all the way, targeting 488, and that's going to be associated 489 with the 9-day moving average. So that's going to be your real first resistance point and that gap fill. Are the bears going to defend that gap fill? That is to be seen. Now, if we start closing below the wick here around 477.66, then I'm basically saying, hey, we're going to slam down. We're probably coming through 473.82 all the way to the 50-day moving average, and that's where I'd be maybe taking some positions off at that point if I was playing bearish, but the S&P is looking more of a stabler play between the two. NASDAQ obviously has more proponent to the upside, especially if you get that 488 play out there. So keep an eye on that. We also are going to talk about the Russell having a nice bullish day, so that gives more credence to everything being bullish. But you guys are not here for the market spiel. You guys are here for the Google and Tesla plays. Now, for all those fun fans out there, we're going to start off with Tesla, right? And if we look at evaluations, it is split 13 to 13. I'm going to refresh it just for you, just to show 13-13, you are absolutely split. So there's not a clear direction, but if we look at the chart for Tesla, that's going to give us a direction of what it's doing. I simply see a massive bull flag forming here, and thus, looking at the expectation for Tesla, we're definitely going to be doing debit spreads. We're not going to be doing credit spreads on this, because with this massive move, the amount of implied volatility, it's going to be crazy, and there's a lot of volume that got transacted right here. So again, big fish are coming in, buying up Tesla. I wouldn't expect to necessarily have bad earnings on Tesla. I'd be leaning more to the bullish side. Now, it is what you can say is a pendant forming right here, right? So if you look at patterns, right, pendant forming here, we're going to break out, massive break to the upside, massive break to the downside, whichever it's going to be. But let's actually look at the implied volatility. Let's look at the option chains and see what they're pricing in. So the first problem that I see with the Tesla play is that you don't have a lot of implied volatility in comparison to previous areas, right? If we look at the peaks, peaking at 100, you really don't have that same implied volatility on the chart. You actually had a contraction of volatility, which we saw with JP Morgan and Bank of America and Wells Fargo, and they all ended bearishly for that day. However, that's not to say, because this is not a Friday play, this is going to run through the week, that implied volatility most likely is going to shrink for us. So we don't want to go too crazy with our position sizing. So going into the trade, looking at July 26th expiration, you can see that it's a pretty even split to the upside, 272 versus 230. And also we can denote some higher open interest. We see around the 247 and the 235 on the put side, and open interest high margins of 260, 265 being massive. So there's a lot of money betting on that bullish side. So if we get a bullish run, market makers are going to have to buy shares, which could trample this into a massive upside play. If we look at basically playing the fringes, again, I like to play that 40 delta. That's just my personal touch. And then possibly keeping it as a $10 wide spread. So 40, 31 delta. Looking at $220, max profit $528. However, I did say let's keep the position size relatively small. So let's even go down to the $82 size, making $168. That's where I would necessarily be holding, just because you don't get completely clobbered by the implied volatility move. And there's you're sandwiching yourself in the massive amount of volume of 41,000 open contracts for that 265 play. So there's a lot of money that would get paid out if this expires in the money. Having said that, that's why I would almost want to bet on the bearish side, because market makers are going to fare better paying out the put side rather than playing out the bull side. So if we look at the same possibility for it, right, 40 delta puts us really close. So we can even actually bet cheaper on the 30 delta 240, buying that, and then selling, let's say, the 232.50. So still $200. We can shorten that up to about the same $82, making it a nice $3 wide spread. And that puts us at a decent profit margin, 50% profit, looking at 60%. So keeping in mind, the put side is cheaper, which gives me concern, because why is it cheaper? Meaning the probability of this happening is relatively less. The probability of the call side happening, especially look where all the money is going, we can clearly see that we got some bigger chunks in the call side. But if I was betting on Tesla to do something crazy, I'd definitely be looking at these higher volume areas. So you're looking at 265, 260. That's where I would maybe even be looking for this play. Nice amount of open interest there. Nice amount of transacted volume. $172, not too crazy. $328 maximum profit. So even you could go crazier and spread it out even further. 300 to 688, again, As you get farther out of the money, the risk does go up. So I most likely would play that 265, 260 spread. Keeps the wings not too massively wide, but still keeps me within relative decent theta. 50% profit is 50%. Not bad odds for earnings. So again, keeping that in mind, I would be playing more to the bullish side for Tesla. However, this is one of those that I'm not necessarily 100% confident in. So going to Google, right? We're going to talk about Google next, and we can clearly see Google is doing something nice. I said that I would not be playing Google unless it's maintained above the 50-day moving average, and congratulations, we actually did that. So now if Google holds above 180 tomorrow on close, I will definitely be playing earnings for it for one simple reason, and that is the expectations are 34-1. So no one is expecting Google to actually, 31-2. So someone actually changed their thought and someone's undecided. But again, 31-2, that's significantly better odds than playing the Tesla volatility of Elon Musk. Now, I gave you guys the option of what you wanted to do there for that, but let's just jump over to Google so we can see what it's trading at, right? So looking at the data, we can see implied volatility nicely going up. That's a sign of a basic, to me, bullish run getting ready in the making, right? We're not actually pricing in that downside potential. We're actually going to push up and thus contract that IV. So going into what we could be expecting, even split, but better to the upside. They're pricing in a higher probability to the upside. So looking at this, we see a 0.49, 0.42 versus 0.4, clearly seeing pricing in to the upside for Google. I'm going to be saying probably playing the 187.50 option and selling the 190. That's $72. I like a little bit further spread, $146 to make $352. Similar odds to Tesla. However, if I had to pick, if I only had $150 to play, which are smaller accounts, I'd definitely be playing Google versus Tesla. Even though you're having to stretch to a farther expectation, you can actually make it 185, 190, which gets you a little bit worse in pricing. It's more $200 to $300. However, you have a better probability. You can also shrink it down to basically the two closest strikes to the open, which is a 1-to-1 ratio. That's why I don't necessarily like that. But then again, I most likely be playing that 187.50, 192.50 play on Google, $150 maximum loss for $354 in profit. That is something that I will definitely be playing, and that is why I'm going to actually put an order in for basically a cent, just to remind myself that, hey, you need to put this order on for tomorrow. And that's what I definitely be playing. Now, if you want to play the downside, we also can show you that. So we basically are going to be looking at a similar spread for it. However, the downside, you're going to pay more because you're not really getting that good pricing, right? Downside, not looking too hot out here, especially with Google. And the spreads are a little bit wonkier out there. So if we're looking at this, I'd probably be playing closer to in the money for 150, 344. That's better potential in my opinion. However, again, you're not getting the best bang for your buck as you go further out with the spread. You're getting into the territory where the bid and ask is getting really, really weak. And also going back to why would you want to actually bet against this, right? 31-2. Personally, I'd be betting on the bullish side of Google. The chart is saying, hey, it's looking like it has recovered for the moment. And especially if we get above that 9-day moving average, I may even open the position up on open. Now, I'd be cautious about that gap fill on Google, right? That is a concern but we can easily leave that gap, create another gap on earnings. Definitely keep that out there. So if you're playing Tesla, I would bet on the bullish side because you're going to get the sympathy play for everything, and everything has sold off recently. So again, you're skewing to one side or another. Google 100% playing bullish, as you saw. I'm putting that order in to remind myself to play Google. So I'll keep you guys appraised on the live stream tonight how that all went down. And again, thank you all so much for watching. I hope to see you in the live stream tonight. Then again, stay safe, and I'll see you tomorrow.